Boom. We are live, ladies and gentlemen. Hold on. I want to make sure this actually switches back and forth. There's two of us. On my left, we've got Mark Smargon, ladies and gentlemen. I said that right. I said that right, right?
Yeah.
Okay.
Smargon.
Want to make sure we get through at least the pronunciation of someone's name correctly before I reveal how not good I am at articulating things sometimes. Mark, you've been working on a new project called Fuse lately. I think the best way to start would just be for you to give us an introduction to yourself and how we end up in at the beginning of this conversation today.
Yeah. So Fuse is actually being built under the radar for the last year. We had birthday last week. We raised money a little bit last year and really tried to take a small team and build it quietly. The goal is to replace Visa. So the end game is to not stay quiet, but build an ecosystem that can really provide an alternative, not specifically to Visa, but really to companies that bundle a lot of services that has to do with credit cards, like Stripe, Square, PayPal. All of those companies are kind of bundling a lot of services. If you're a consumer or a merchant and you want to use Square, you're paying them 3%, almost 3%. For every transaction, but you're getting out of the box like invoicing, payroll, you have like a bunch of services that you get, but you only need to pay 3% and you basically get access to all of those services. The same business model works for Stripe. When you charge, even on like big products like startups use them a lot, Slack, Zoom, if you purchase on those websites, it's actually being processed through Stripe, and they're charging 3%. So the idea is to take this 3%, offer a solution that is free, and the only cost is 1 cent per transaction. So instead of charging 3% for every transaction, charging 1 cent, doesn't matter if you're moving $1 or $1 million. And that leaves a lot of room for new business models, for smaller players that can use those services, for new types of products you can sell, because you like products that have low margins can't really use those bundling services. And also bypassing Visa entirely just opens up, a blue ocean of possibilities. If you remove those systems, that some of them are really ancient, like from the 60s. So that like the really fast way to explain that, Fuse is really a backend product and a network for payments that can provide the same services that Visa provides, or Stripe or Square, but at a very low cost. And it works mainly with smaller players. We have pilots right now launching in mostly in South America, in Africa, in North America, in Europe. The idea is to reach places in the world where you don't have those infrastructures. So Stripe doesn't operate outside of the US, parts of Europe. It's a very fragmented space. Stripe only supports credit cards. What if you want to use bank accounts? What if you want to use cash? And I think the larger trend here is really how do we make this friendly for mobile users? Because even stronger than crypto and even stronger than the open source movement, there's this very strong consumer demand to pay with the mobile phone. And, on the mobile phone, you don't really need Visa, not really. So there's like a huge opportunity to reach places where people just use cash and have smartphones, and they want to use their smartphones to pay, and it's just too expensive to develop, or there's not enough infrastructure. So this is the Fuse product in a nutshell.
Well, I always like the idea of the building in areas where the infrastructure is lacking. It's one of the things I've always liked about the potential of this technology. As Bitcoin's gotten older, it's become apparent that it's much more of a money. It moves slow. It costs a lot to move things. You're less likely to spend it, just like other illiquid products in someone's portfolio, from property to like abstract art, I guess, to some degree. So when we're looking at the way each of these types of currency move, you can't, having that cost and that security of the transaction versus, say, the developing infrastructure of Central or South America, especially if in disaster relief has been one of the things that I've always been interested in, because you can offer out of the box services for like kind of community voting and not just transactions. So there's a huge area, I think, of interest in that niche of how do we provide the services to the people that need it the most now that we have things like this. Because yeah, PayPal charges too much. It's ridiculous. For what did you do? What did you do? There's there's insurance, but the things that go into making them a big regulated company. And I think we'll start to see the development of that around these protocols as we move forward. But how do we get this into the hands of this technology in the hands of the people that would benefit the most to some degree? Because right now one of the big questions here I want to get into a little later here is about some of the funding models that we're seeing. But you had taken us over the like how Fuse launches some of the communities really easily, and you can have a white label wallet, or you can start your own product. It's kind of like an out of the box service for clients. Do you think you could screen share what that process is like? Because I remember it being pretty easy. And
so I can screen share, but I just want to comment one thing about what you said. Like, I really think that I'm in this space since 2013, and this is actually my third company in crypto. But my first company, I started 20 years ago with my brother. He still manages it. Has nothing to do with crypto. It's an e-commerce provider here in Israel. So if you're buying movie tickets online, or clothes or pharmaceutical, like really straightforward Shopify type of product. And really, the thing that made me excited about Bitcoin and crypto, nobody called it crypto back then, it was only Bitcoin, is really the fact that you can get paid by anyone, anywhere in the world. Right now, if I want to collect payments from a US citizen, I need to be physically in the US. Like, I need to be registered in the US if I want to have a Stripe account, let's say. So there's underwriting risks, there's consumer protection, there's frauds, chargebacks, all of this value layer, of payments can simply be abstracted away. So that's really what made me fascinated with this technology, and this is why I'm full-time in crypto for the last 8 years. And the first thing we tried to do like about the month after I bought my first Bitcoin, I bought only one, like it was $20. A big mistake, I should have bought more. But really, I've been doing this full time ever since, because first thing we noticed, it was really hard to buy Bitcoins. So we started a company that was one of the first companies here that allowed you to buy Bitcoins, and it was one of the first companies that was licensed to do it. And then the next thing we thought to ourselves, naturally, because I deal with online payments, is let's add Bitcoin as a payment option. And this was really exciting to do, and people were talking about this a lot. But that was the first lesson of like, will crypto replace Visa, or will crypto be in real life? The answer is Bitcoin. Paying with Bitcoin for beer is basically makes sense as much as buying beer with Facebook stocks or with gold. It's not really something people will do. So maybe you have a lot of gold and you want to use it to pay, but there's a lot of friction. And even if you solve that friction, there's still a slight problem that taxes are being collected in fiat, not in crypto. So you'll always have friction with crypto payments. So then the next company we started really took that like technology and idea and sort of tried to extend that, and let's create an overlay protocol on top of Bitcoin that can represent real world assets, even fiat. Even, there was no stable coins back then, but representing gold, stocks, movie tickets, anything that could have Bitcoin properties. It's not double spendable, it's transferable, stuff like that. So that was colored coins, and this was actually something that was also, Vitalik Buterin was part of this project at the early stages. It was back when people didn't fork, didn't create new blockchains that much. It wasn't a acceptable thing to do. It was kind of no, like Bitcoin people would really be upset. So nobody really talked about creating a new blockchain or even competing with Bitcoin. It was very early. But fast forward a few years, you can really see that this technology is really mature. If we're talking about 2017, then there was a lot of trade-offs that just don't exist today. Like it's either, back then it was either, so people really don't see, like even though it looks like we're far from our goal of bringing this to mainstream users, people don't have this perspective of the last 8 years and how this technology evolved in a very rapid pace. You can today build in a few lines of code something I'm not exaggerating, probably would take you a year to build. So today, in your fingertips, you're building on top of layers and layers and layers of other people's code that was already, battle tested, already audited. Standardization starts to evolve around every piece of the stack. This technology has the potential. It's slow, people don't feel it until it's too late, but eventually the cost reduction here is huge, because starting a new bank is something that will cost you probably only in IT cost a few $100 million. If you want to start a new bank and create the licensing, but also the security and the infrastructure, and then dealing with consumer products as a bank is almost an impossible task. It's a huge amount of investment. Because banks are not good with internet. They're good with offline systems, and Bitcoin is online. So this technology is just a game changer. Open source financial services, not something that you really hear about, but I think it's really the future. I'm not even mentioning the word crypto, because it's a bit like any hype cycle. At the beginning, everybody talking about crypto, but nobody's doing it. But then nobody's talking about it. Everybody are doing it. Like it's something transparent underneath the surface. So this is why we built Fuse, for that day where payments will be just a transparent layer powered by this open source infrastructure, and you wouldn't even feel that it's crypto. You wouldn't call it crypto. It will look like Venmo or WeChat. It wouldn't be any different than any other centralized product, just that the operator would not invest $100 million to develop it,
Yeah, this area of conversation in itself is so vast. It's probably one of the most overlooked aspects. I think the slang that we use for it, it's just become a part of the ecosystem. Like some of the developments I've been noticing in the background, we're finding on 4chan, because the developer community, we basically the tools of the financial elite have ended up in the nerds and the programmers' hands. So we're seeing a reflection of a lot of these what a lot of these minds are into become the first place to find kind of its footprint. And we see that large market interests are here now. They were here in 2017. They started the bull market then, and then they're starting this one now. But it's much more systematic. They recognize very clearly that this is a numbers game, and that you're dealing with the building of not just one layer solution like the TCP/IP protocol, but how you build all the other abstractions, and more importantly, the user-facing solution that allows, again, the communication of, what are most people using their bank app for, right? Instead of how it works. And that, we've been in that area, 2015, 16, there's a lot of stuff going on. And then we saw large market interest show up then. So you have, I think, a relationship between the large market interests focus on an area, and then and what's interesting now is because the developers have gotten hold of, there's these, you're getting hype cycles that are created because of what the technology can do. Because the monetary system is actually extremely abundant, but it's locked up. It's in like people they're like, oh, Jeff Bezos is capital went up for like X amount of billions of dollars. Like, motherfucker can't spend that right now. Like, the liquidity is locked somewhere. So these types of tools and services allow us to take that liquidity, move it around really quickly to a bunch of different areas. So there's this, it should be able to create an almost internal type of abundance, because it's massively deflationary to remove all those middlemen, all those costs, and be like, well, here's a financial product and service that does the same thing, but doesn't cost anywhere near as much, even with a few $100 gas fees. Like, there's no brick and mortar banks. There's no, you're really putting. So I'm fascinated again, because the intellectual capital and the human interaction with these systems is what makes them so valuable. It's your participation in the network effect that makes it valuable. So the idea of stakeholder capitalism. So how do you get the community involved to be rewarded through that stakeholder? And so tell us a little bit. I guess we don't have to do the screen share, but just tell us a little bit about how because we went over a conversation last time, and you were showing me some of these areas of building community and how you could basically white label some of these services quite quickly now.
So just to answer your question about the communities, so first of all, and connected to the previous question. So first of all, I think a lot of people misunderstand. Like, maybe I'll say something controversial, but in my opinion, like, technology has one like real goal. Like, it's lowering entry barriers. If you look at what technology allows us to do, and what it gives us in general, in the internet specifically and mobile, it's really lowering cost, or lowering friction, lowering entry barriers. And this is really something that was not a big focus for blockchain technology in general. It's not considered traditionally to be a cheap way to do anything. Moving money, bypassing banks, yeah, that's definitely because banks are ancient. They're still using mainframes and offline systems, so they're super clunky and inefficient. So there's a lot of stuff you can improve. But basically, on every aspect of banking, you can have like a centralized product that can do it better. But it was really challenging to build a decentralized product that can actually bypass banks. I'm not talking about moving Bitcoin around. I'm talking about actually integrating into banks, actually integrating into everyday life. You didn't really see systems that are focused on let's improve the experience of getting a loan, or let's improve. You have like big bank, private blockchain stuff of initiatives, but that's not super interesting. You didn't really have a public blockchain that dealt with integrating with banks, other than Ripple, which I'm not sure they managed to achieve that. So my point is that that when I say community and when I say local, I mean there are a lot of millions of local companies and entrepreneurs that want to integrate to banking infrastructure but can't. They want to develop financial products but can't, because integrating to money and creating a good experience with money, it's expensive. And this is what Fuse is trying to do. And when we see communities or say communities, we really look at those local operators. It's not a social for-profit humanitarian type of thing. We really want to give them a way to earn money, to set up their new innovative business models, to do the footwork, but not deal with the development cost or operational cost or regulatory cost, bypass them entirely. Using non-custodial technology that it's pretty experimental and it's pretty new, but it has a promise of creating systems that are absolutely different, like mutual credit. You don't need to use the bank's credit score. If everybody knows everybody, can create much more interesting local credit systems and microcredit systems. And we have companies that build that on Fuse. Charity, for instance, begins to be super interesting because charity in some places is done with food stamps in the US. Sometimes it's done with paper, with cash. And it's not really trackable, it's not programmable. You can't really understand if it goes where you want it to go. The donors don't have any understanding of like the impact of what they're donating.
But
So
there's no
charity,
positive feedback either. So
right,
that
right.
was one of the things that excited me about the potential for disaster relief is because if you give people the technology to basically rebuild themselves, so you can bring them the products and services, but you basically you could put the contributions of like for Vanuatu right into their economy,
Yeah,
and then once they started moving it and actually spending it, it would become more valuable through its participation factor. So you
yeah,
could basically create like give them their own economy to start, and it would become more valuable over time instead of and again
yeah.
so simple.
Is exactly why we call it microeconomies. Like we prefer to call it not communities, but like anything is a community, but not all communities are around value. But a lot, I would say even most communities are also microeconomies in a sense. When a business decides to print vouchers and do a loyalty system, it basically creates a small economy. The only problem is when it's printing vouchers, it doesn't have any information. It doesn't know how much is sold, how much was used. It really doesn't have any way to manage it effectively. Like it sounds easy, just print coupons or vouchers, but those coupons and vouchers are like kind of their own economy. It can scale up to being air miles. Air miles is a huge economy, and loyalty in general. It's 30% of the retail market. So that's just like one example. You have islands. Any island is a small microeconomy. Small islands are microeconomies. They have probably one person that sells everything that, there's not a lot of competition. So it's really the isolation, the physical isolation makes it like sort of its own economy. And there's a lot of islands where people use cash and use mobile phones and really want to use the mobile phones to pay, but still don't have the infrastructure. So I can go on and on. A football team is a small economy. There's the fans; they want to support the actors. Patreon, every artist on Patreon is creating his own microeconomy of a sense. Like any artist can create his own microeconomy. And I'm not talking like stuff that are too far fetched. Those are just ways to create those, as you said, feedback loops with your audiences.
Yeah, this is part of the conversation. I was interested in having like a practice model, and I mean just to see what happens. I'm sure there's some legal questions that I have to get into, but now that it's so easy to do some of this stuff, to say create a token and have a kind of a white label wallet, because that's as we're talking about is the ability to offer this really easy to access infrastructure where you can you can brand it for your own community, because and David Bowie got into stuff with the how do you capitalize on the relationship between you and the consumer, like the direct to people relationship through even things like YouTube and Twitter has built this whole new form of an economy where you and your consumer, you need the more you can get rid of the middleman almost entirely here in so many different angles, because people are interested in this one thing. So not the network growth of the network itself, but the participation growth. What if there's this early rapper that I was a big fan of, and you start supporting them, you're buying part of their tokenization of their YouTube channel, however they want it, whatever. It's mostly all speculation in terms of what value is. Otherwise, paintings wouldn't be worth more than just paper price, right? People speculate on value. So, I mean, we have to expect that's like the course of the nature of value. It's speculative.
Yeah.
There's no reason to say a Van Gogh painting is worth X. It's just entirely, we're all hallucinating. All value is basically a mass hallucination that we can agree on. Yeah.
like
Unless it's for
follow up.
survival, like water or air or something, you know. So what I
But
really like about this is
I
you
would
can,
say that putting the word token maybe distracts from the main thing. Like people are buying merchandise, you know. What if you would buy a merchandise and earn something in return, just like you do with air, like when you go to buy a flight, you're getting some air miles back. So you can imagine that this infrastructure that allowed you to give those air miles as a reward probably cost the airline companies millions of dollars to create. And now there's the technology that allows to do it for almost free. So if a small retailer in the past needed to go and print stuff because that was the only thing he could access, now there's a new method of basically instead of printing, doing something more powerful. And that's like really the right analogy. I would say it's more closer to air miles. You know, there's so many companies that have rewards points. You know, you have Rakuten, which is the Japanese Amazon. They're like a mini central bank. They have billions of dollars in yen that they're managing, but it's their own private currency, nothing really regulated. They're not a
yeah.
bank.
No, that's why I went with the artist standpoint, right? You know,
Yeah.
let's say, you know, these guys are having to adapt right now. A lot of the musicians or street performers are realizing that they're having to use like live or Instagram live, or so people are adapting. And you give, I mean, they're a lot of what their product is their relationship with the community, right? It's not, a lot of people don't necessarily even have a product or know how to offer one. Like a street, like one of a really good friend who's a well-known street performer, he doesn't have, but whereas I want to support him, so every time I see him live on YouTube, I'm giving him money because I like what he does. I'm like, cool, man, like I love seeing you do your thing. And then I would do the same thing with buskers and performers, right? So there's a level of the economy here where the growth of this small little ecosystem for them could be significant versus what you get from having the friction of the, like, say a $5 bill actually land in there as well, because every time more people are moving into these small economies, like with one of the things we see with Wi-Fi right now, the reason why the price is so high is because it's a very illiquid asset. There's only like, they only made like 90,000 of them or something. I don't know, I might be wrong here specifics, but well, so then every time it go, yeah, it's
That,
it's not
like
hard to do.
that's the genius of this technology. Suddenly you have digital scarcity at the end of, and at the end of the fingerprint. Like think about trading cards. You know, they're valuable because they're scarce. So suddenly you have a way to do digital scarcity, which is
Yeah. Well,
much
I think
amazing.
I think what's been kind of mind-boggling to me is that it very quickly turns into a new model of abundance, right? Because the scarcity model will inevitably be replaced. The trajectory that we're on with technology right now, it's easy to see that eventually we'll get to a point where there's so little friction in the way that we create energy that things should relatively cost nothing in every aspect. Like technology in its entirety seems to be deflationary. So prices inevitably should be going to zero for everything because we can create it with very little input. Every step we go forward, it's easier and easier to create these things. So, you know, this technology and what we're talking about right now is just a very important abstraction, which is of how is your value with the community related to on a, like a token of gratitude aspect, right? Because, you know, it's one of these, and we go back to this conversation on part of the aspect of value here is that part of it is speculation and what people are willing to hold on to or sell. Because, you know, I tell you, if you've ever had if the abstractions ever showed up where you help save someone's life, they're drowning and you pull them out of the water, their first instinct isn't to give you money, right? So money's value compared to like the abstraction of survival is different. What people usually give you is a token of gratitude. They'll give you something that was important to them, like the watch their father gave them. They give you something that's of a physical representation of this tokenized gratitude. So, you know,
Like
if the further we get into it, I feel that this is, even though they're systems of scarcity, what they create is a whole new level of abundance where we shouldn't be having these problems where people don't have capital, like where there's no access to the game for them to have whatever they need. There's more than enough here right now. It's that the friction that's stuck in the old system and the lack of that liquidity of that system, locked up in shares and banks, and no one wants to move it because of taxes. Like, all the real energy is locked up right now. So if we can release that, we're everyone can have pretty much whatever they want. Like this, we hit that a point a while ago, I would suspect. So now I'm really interested to see how this works for the individual. So do you have any small, like, test data demographics? Because again, we're talking about microeconomies. What does someone that has like 1,000 followers interacting with an ecosystem look like, and what type of changes in that ecosystem are seeing? That type of information to me, and I think in large would be so valuable. Like, I know we had told Robert about this thing for the UN, and you guys have now, like, you're on the short list for some of the projects that have been accepted, because this is what I'm fascinated about, is how do we solve some of these problems. So I really like what you guys have put together. And do you have some of that early stage data of what, like, 1,000 people interacting in these small ecosystems, closed loop ecosystems, looks like?
First of all, one thing that I can say for sure, and I think everybody will agree, that economic incentives work. So if you want to airdrop money to people, building the infrastructure is not cheap. It's not like super easy, because you need to deal with regulation, you need to deal with creating good experience. Like, there's a bunch of stuff, like even pushing this for every app store, like there's a bit of friction. But once you do that, it's very effective. So we were testing airdropping, we called it DAI points. So it was like every DAI point was 1 cent of DAI. And we got like 4,000 accounts in a day. So those are examples of things that we played with, but the network itself had 500,000, a bit more than 500,000. You can see it on our website and explore 500,000 transactions, and that's without that, like, no marketing. We had 300 communities launched on mainnet with the studio. You can launch it also on Robston, but apparently people were very excited, and today the fees are like a bit higher. So probably this was something like more people are doing this on testnet just to play with it. But out of those 300 communities, we chose 10 pilots that will be like our showcase. And only now we're starting to do marketing and started to build our marketing team and get out of this stealth mode. Because we were pretty anonymous until now, and the test that we had, we saw numbers that are really nice, because anybody can install an app. And once you, like for instance, in one of our pilots in Trinidad, we had local merchants that put QR codes, and people physically go to those QR codes, scan them, it installs the app straight from the App Store, gives them a bit of points, and they can shop. Like, you see how much money you have, you see where you can spend it. There's literally zero learning curve. And this wallet is not really for people that want to buy crypto, but it's a good way to onboard people later to crypto. So instead of going through fees and be your own bank and deal with public keys and private keys and all of those stuff, you can really have like an entry-level friendly version. And this is what excites us, that we don't necessarily see millions of users yet, because we're really early stage, but we see the potential of reaching to millions of users. While if you look at DeFi, all of DeFi right now is like 400 or something around that number accounts. So all the accounts that interact with DeFi contracts is about, it still doesn't touch mainstream that much, and many of those are whales. So so what we're looking at is how can we bring millions of users. So it probably will require thousands of local operators translating to dozens of languages. We're currently translated to 10 languages already. Being fully open source from the client side, from the server side, being cheap, but not only cheap now, but you can anticipate cost. The cost, you know it will stay cheap. Like you wouldn't want to work on a platform that you know that if it will succeed, it will be more expensive. So the model that we're looking to validate. Our model is how we can create this ecosystem, because not one company can build something like that. You need an ecosystem. But a network with thousands of companies building on top of it, that's already something that can, replace Visa. So this is the vision. The way that we look at the numbers right now is that because of the low barrier, entry barrier, anybody can use it. You don't need to be technical. I can share my screen and show the issuance process. But really, anybody can do it on Fuse.io without any technical knowledge. So after they have the wallet, sending this to an existing group of users, again, very, very fast. So suddenly we see a spike in usage. One day we had like thousands of users from Indonesia because somebody shared this in an Indonesian Telegram group, and already they translated this to Indonesian, so they have it in their language also. So the numbers are really easy to it's really easy to generate good numbers. Basically, what you're saying to people is download this, get some points, share this with a friend, get some points, and then go together and shop somewhere at the local marketplace or local business or online marketplace, anywhere you want. Again, based on the place and based on the use case, it's very versatile, like from a football club in the Netherlands to an island in the Caribbean to a stable coin issuer in Singapore. So you have like all types of communities, but all need like the same common denominator. They need a good payment experience, which crypto just doesn't have.
Yeah, there's there's again these different layers of the communication with the average, not the average user, but the general population is so important. Yeah, and, I think again what I'm excited to see is that early data of like a small community, even with NFTs. And I want to point out how awesome your shirt is, by the way, as well. I love the psychedelic bear you've got going on there. Yeah, it's nice. It's a great shirt. I appreciate that. I love psychedelic bears. But my my sentiment here was, you know, that early data of the relationships of what these communities look like, right? The DeFi space is pretty exciting right now. There's a lot of really cool stuff that they're building there, especially for proprietary deal flow and the nature of I think the renaissance of this sector too, which is how do you build something, launch it somewhat fairly, and and have everyone become a recipient of the growth of the network, and there's trying different ways to employ that. And what I like, again, what I like about this is that there's my interest in Bitcoin. When I first saw it, it was $90. I didn't really know what it was, but the first time when I really figured it out, I was in an indigenous community in Guatemala, and it was like this postcard, and it had a Bitcoin in the center, and it had a flower of life and like some hippie around the side of it, right? But I realized that a part of the nature of this is that it's choice. Part of this is about not just one thing, but the herd. You're looking at much more of a zebra style build structure than, say, a unicorn, which is where we are coming from, because you want things to blend in with the herd, because it's stronger that way. That's like the whole point of some of these decentralized structures, that their strength is in the numbers of the herd of all the different nodes. There's no, so you can't even just having Bitcoin itself would go against the concept of decentralization, and having multiple versions of all these different things that can interact fairly freely together with still a significant amount less friction than what it was to send a wire transfer or a PayPal or a Western Union, like just all the way down the line. We've erased, this technology has erased that middleman. And where it's most valuable is in these areas where the people are hit the hardest. Like that's how I feel about it, at least, is because that's who needs it the most. Like right now, making more wealth for ourselves is exciting for everyone to invest in, but a big part of problem we're having right now is the disparity and the gap of the wealth that's making a lot of these problems too, because it's, you know, it puts a target on the back of the unicorn, or the right. So now the zebra herd is so much stronger because the unicorns have guillotines to be set up in front of their house. Like, we don't want them anymore. Like, slow publicity down, right? So building a structure that's much more adaptive to embrace the no one big center point of failure through companies like Amazon, but have like all these different decentralized nodes that can interact again freely. So I really would be interested to, again, I want to see some of the like the hard data, because we went over, you showed how, I mean, for those of you that want, and if you want to show us, Mark, we can just run for a longer part of the conversation. Shows how easy it was. But again, what I want to see is like what happens in the hands of a content creator or a small artist. Like I'm like, there's people I watch on sessions, and I'm like giving them like hearts and lovey things, like when I like their music, because you know, we're all adapting to some of these new changes and the way we can integrate with technology. So I want to see what happens if you give it like the, you know, a small entrepreneur, just like you're saying, can they create their own little built-in economy that can interact with another one and actually receive a net like a massive net benefit to their own internal currency system and its relationship to something like Bitcoin, because it just makes the system stronger by having all these separate nodes functioning together, and cross communicating, and hopefully with very, very little friction. So I'm really excited for this type of stuff. If you want, yeah, screen shares showed out like how easy it was, but it's just like you open up fuse.io, you launch a community, you go through a few steps. Before you know it, you can log in, you've got an account, your new name of your token. I think it costs some of the Fuse, or obviously the Ether or gas transactions. So I guess right now, you can show us, but also tell us about the biggest hurdles right now in overcoming some of the abstractions from the infrastructure layer, like, you know, with the external gas costs. Are these getting in the way of the like the reduced cost for the end user, or do they have a much cheaper system because it's not it's on a different side of the Ethereum chain?
Yes. So first of all, it's a totally separate chain, which is bridged to mainnet. It's an Ethereum sidechain, so you can move value between Fuse and mainnet, and DAI that's created on mainnet, you will pay. Right now the fees are crazy. It will cost you something like $7-10 to move it, but then you can bridge it to Fuse and pay 1 cent per transaction. So it doesn't really make sense to buy milk or send allowance to your kids or do remittances on mainnet. In most cases, it does make sense to, like, mainnet is a global settlement network, but it doesn't fit, you know, this use case of everyday payments, a Visa alternative. It's more for trading, for minting, for doing like those advanced types of financial assets or new types of financial assets. Fuse is optimized for payments, and it's doing this vertical integration. So this is why I compare it more to Stripe, but backed by, you know, Ethereum liquidity, because it's bridged to mainnet. You asked about data, and I think it's really important that just like Ethereum is, you know, still doesn't, the numbers there are not amazing, like in terms of usage. It's really about total value locked, and with Fuse, it's really the same thing. We see this as like the most interesting thing that we think is that you know, actual value will be locked on the network, and then inside those communities, moving value is really frictionless and really cheap. So people will just have more velocity to the currency. And, you know, there's a thing called the multiplier effect that was coined by Keynes, a famous economist, that you basically move $1 around, it makes much more impact than just, you know, send it one time. Keep it inside the community, making it circulate. It's called the multiplier effect, just generates more economic activity. In other words, it generates more data. You can build new business models. So what we're trying to show is not necessarily, millions of transactions and we're competing with Venmo. We're not there yet. We're really looking into like the long tail of communities. So the strategy now is take those 10 communities that we have, scale it over the next year to 100, and then reach 1 million transactions a day within 3 years by focusing really on the long tail. So not one big community that will do million transactions, but 1,000 communities with 1,000 users on average will do 1 million transactions a day. And that's a modest estimation. And just an example of a community like that, we have 1,000 people village in the Amazonas in Brazil that have a local currency that's called Verde. And it's paper-based, and all of them have smartphones, so they can use a mobile phone to pay, and they can connect to a bigger community of people that lives outside the village, and of course connected to banking. So you can go to remote areas with those types of services and products. And the numbers there, I'm telling you in advance, even like if they really, really succeed, we're not talking about millions of users, there's a limit to the potential of one small village. But if you connect thousands of villages and you build a shared infrastructure for all of them, it just makes more sense. Until now, there was no reason for a bank to go there. But Fuse, it's open source, it could go anywhere, like literally any place in the world. So that's really the vision.
Part of what I would like, I want to try it, right? I'm like, okay, well, look, we got my monthly newsletter. So if you have these tokens, you'll get a 30% discount or something like that, right? So yeah. There's 10,000 of them. We'll make it ridiculously small, and then every time you can, I don't know. We'd have to actually think about it. Which I don't want to do. By the way, we're just hypothesizing. What would that yield based off just that consistent economy that's going around on a month-to-month basis, moving, and okay, well, nice. I want to get my discount. This is how I pay for it. Effectively, what does that look like in terms of the growth of that little economy? That to me is one of the most interesting parts here. Again, because it's not just about one of them. It's like if you can share that infrastructure really easily, if you can get a bunch of people to adopt, like my marketing strategy would be to build this for every single content creator that I could get my hands to, or get my voice to communicate with. Because if you just go in, build them a wallet, give them all the tools they need, and teach them how to basically teach them how to use it, it'd be your greatest marketing tool. And because you'd be giving something for free, effectively. Yeah. I mean, that would be one of the easiest ways to do it, because like, here, try this. Maybe we'll even back you and like pay because they have thousands of community members that are paying for stuff all the time. Like, think about how PewDiePie had 105 million subscribers and selling T-shirts for like.
Exactly. What you're talking about is kind of gamification. So you're telling people you can buy my like it's on iOS. You usually have in-app purchases. The same goes here. You have a website, an e-commerce, a mobile wallet, doesn't matter. You want, first of all, to give something to a new user, because he joined, he subscribed to you, he likes you, so give him a little bit of money to everything. This is where the gamification starts. It's much more fun to get something for subscribing than just subscribing. So that's one. The other thing is the fact that you can give a discount if you pay with this. Like, you can pay with ordinary money, with you put in your credit card. But if you have those coins or these special NFTs, then I'll give you a special discount. And then it only gets more interesting. Maybe secret information, maybe secret merchandise or stuff that only holders can access, or time, or questions, or features. I think it's what people sometimes call brand equity. Like, it's not something that was monetized that much. It could be used for any brand, but that's like example. It can also be super speculative. It can fluctuate in value, like those. I don't know if you heard about the Chili's tokens, like the sports club that's selling tokens and trade them on exchanges, and they play with them, and there's a huge ecosystem that starts to evolve around that. But that's like more like a little bit speculative, right? So you're basically selling and buying those tokens for different prices. Like it's a whole new different, metric that you can start following and generate traction. So that's like the speculative part will always be, also interesting. So it's not only trying to gamify stuff, but also there's the Patreon model, which is super interesting. Maybe we want to support them long term, so there's like interesting things you can build. All of them can pretty much use the same infrastructure that Fuse is offering, because Fuse is really trying to be model agnostic. Like we don't say, okay, use this only for that. Maybe Fuse is like a backend infrastructure comparable to Visa.
Yeah, it's probably because I have so many friends that are on YouTube and stuff like this and have followings. That's who I would specifically focus on, because they start you off with, big data like that too, very, very easily. I'm like, again, because I would be interested. I'd be like, okay, well, what does that even look like? Because it's just, I don't even care if it makes money. I'm just interested in that data. Like, that's so fascinating. And this is why I think, again, why it does so well. And the gamification aspect, people are working on this in video games for a reason. But if we look at it in the disaster relief area, you could be part of a funding model now that got gifted NFTs, which cost relatively nothing to produce. They're one of a kind something, though, for being a part of that. So now you're funding a model of a new currency and then being rewarded with the NFT. The NFT might even be worth more later because the world is speculative. Like, you never know, like the Wanawatu token of it's like worth 10 times more than you paid for it. So you can like redonate it again. Anyways, the gamification aspect of what's taking place here is fascinating to me. So I'd be really, again, I'm interested to see what those early data numbers look like on a small community of 1,000 people, or of a content creators community of 1,000 people.
Because I can say in my previous startup, we were pretty big here in Israel at one point, Kolu, and we had an interesting dynamic between the number of users that join, the number of transactions you get. The dynamic was like similar to the equation that used to calculate network effect. So every time we added a merchant, it doubled the amount of it gave you much more transactions, but not in a linear interaction. Like the more businesses we had accepting this service, the more transactions we had. So the transactions went up exponentially when more and more businesses joined. So that's really super intuitive. It's just a more useful product when you have a lot of acceptance and merchant adoption and stuff like that. But also I think it's kind of like it's resonating with something you said before about the herd. People are trust takes time to build, and crypto a lot of times has a problem, generating trust, and this is why a lot of stuff are taking a bit longer, because people need to trust, new products and new services and new brand names and new means of exchange. So what we see is that you need to, if you want to replace, parts of the existing economy with this infrastructure, you need to really take your time and focus on building trust, because it's not building a new, it's not a new internet economy. It's really stuff that are, everything universal, going to a grocery shop and buying stuff. Everybody does that. So how do we onboard people to this infrastructure? It will take time, and it has a lot to do with generating trust, like giving the tools to local operators that give this customer support, do the service, do the footwork, have a smiley face, take time to think about those models, think about the business, think about how to integrate this to banking, do even licensing, talk with the banks, deal with solving the problems, and we're just a provider. They know about the problems that needs to be solved. We're really a back-end solution.
Yeah, building again, the outreach for this type of community stuff is so important. I think you're right. Building trust in general with anything that's financially based, like the on and off roads, you're dealing still with very niche product. It's you trying to explain it to a lot of people is going to make sense, but that's why finding the progressive spots where it will work and be adopted quite quickly is such a smart way to go. Well, Mark, it's been a pleasure. We'll leave your links down below. Fuse.io, super simple. I love this out of the box community building idea. It's something I would try out myself even once I get around to having the time to do to do so. There's a million other things apparently to be working on too, but the focus here, and again, you know my area of interest for stuff like this is specifically in the third world, just like you guys are focusing on, and in the disaster relief sectors, because again, I couldn't imagine like you all of a sudden some big disaster rolls in, you don't have a birth certificate, your identification, like you basically are nobody now to to the rest of the world, no bank accounts, like no, all that stuff is gone and infrastructure is gone. But this simple solution of a phone with an economics of like an out of the box economic system for the people that could use it the most and it's so simple and easy, and it's a way to really remove some of the friction that we have in getting these economies money, which is we don't even bring them supplies, bring them the supplies and sell it to them, but give them the money so that they're in charge of the building and the recreation of and the growth of their own the growth of their own economy that we just gave them through this through the contribution. So those types of answers to me are huge, and I think it's one of the areas that again that my focus here has been the most interested in, because those are the people that can use it the most. I think my first test run would be with content creators, because they're usually the people that are cutting edge enough to try the new things, to be hip on Twitter or YouTube, right? And not to say that people that aren't on those channels, right? But everything's gone direct to consumer or direct to community is much better word for it. Like the community and the product and the service are like this, they're finding a relationship with each other. So doing that with these new models, getting the test beds down, seeing the early stage evidence of what small communities can do in this growth, I think it's fascinating. So it was fun to have you on. Just so like everyone knows, not like the reason I want to do these from now on is to just try to keep up with this space. Like I forgot how quickly technology moves and how much time I spend sitting out in the jungle. Like I'm just going to have conversations all the time to try to keep up with what's going on out there, because it moves so quickly. So thank you, Mark. We'll grab the rest of your social links, but just check out fuse.io. And if you want, launch your own community, I suggest it. We'll give it a shot. If I had more time, I would I would be doing that right now. But if you have that extra time, give it a shot and see how it works, and go from there. And then yeah, hopefully we'll be able to chat again soon and keep us updated on I'm sure Robert will tell us, but I'd love to stay updated on what happens with the conversation with the UN, because that's where I think this stuff is so needed. The rest, and again, we go back to this just to kind of tidy off, but ladies and gentlemen, if you have the privilege to think about like wealth or money or something, that's a privilege right now, outside of just needing to survive, right? So there's a lot of people in the world that are just still trying to survive with what's going on right now, and these types of solutions in these types of crisis modalities where there's all this locked up capital, supply chains are kinking, we need stuff to help fix those problems, and we're going to be faced with them, and we need to think about the people that are going to get hit the hardest, because even though it's not in our back door or it's not in our backyard necessarily, if the rest of the supply chain starts to break all around the world, we'll all be like we all feel the downstream effects of that. So being able to mitigate these by being able to offer these types of solutions to where it's hit the hardest, I think is one of the most important things. So I'm really excited about that. Hopefully you guys go further and find more funding, because that's, I mean, it's the UNICEF collaboration with the UN for their blockchain innovation. You've got Chris Fabian and Bill Kite as his friend. Like, these guys are super hip in the VC world. And I think, you know, I think again, this focus of helping the people that could use this technology the most, especially when it matters the most, is what's most impressive to me. So thank you, Mark. I appreciate your time today.
Time. Thank you.
Awesome. Give those a thumbs up, ladies and gentlemen, or thumbs down. Either way, it doesn't matter. It's up to you. We trust your opinion. Leave your thoughts, your comments, your questions down below. I will do my best to help answer them if I can, or send you somewhere where you can find the correct answers from their sites. Yeah, and that's it. We'll see you guys again on another token tangent with the podcast and TO. See you guys. See you again soon. Thank you.
Thank you.